Welcome to When Technology Goes Wrong. I'm Paddy Dhanda and I head up the product discovery and agile practices here at QA. In every episode, we take a deep dive into a technology failure and try and figure out what happened and how we can learn from it. However, today's episode is a little bit different. We're not going to talk about a specific failure, but instead an entire sector, financial services, and why they're not yet making the most of the data revolution that's taking place. Not really a failure, but more of a missed opportunity and the failure to perhaps adapt and be more agile. So, joining me today to talk about this is David Poole. He's the portfolio director for data and AI here at QA with a specialization in AI training, machine learning, data analytics, and business intelligence. Oh my God, David, you are one of the smartest people I know. So welcome to the show.
Thank you very much. Thanks, Paddy. It's great to be here. And yeah, as you say, this whole world of data science, AI, data is the currency of every organization. It powers the new world, and many of our customers are trying to get to grips with it and just make maximum value of their data estate. So yeah, great to just talk this through.
And the reason why I've invited you on today is because a few weeks back, you wrote a great article on the QA blog that was all about alpha data and essentially how data can help organizations get an edge. And the fact that I used to work for an investment bank, and this subject's very close to my heart. So, financial services industry is on the cusp of a major revolution in how they collect and analyze new types of data to understand risk and make decisions. And too many organizations are still not doing it. So, before we jump into the subject matter, David, I just want to get a few definitions out the way because we're going to be using these terms interchangeably throughout. So, could you tell us what are financial services? What is alpha data? And what is the Internet of Things?
Yeah, sure. So, I mean, financial services is it's a kind of all-embracing title, really, for any organization that's involved with the movement of money or the support of money or general economics, if you like. So, it can encompass everything from your kind of retail banking, household banking account, insurance, investment decisions that you're making, right the way through to international markets and how international markets move. And right now, international markets are at the front of many people's minds with what's been going on. And when markets work well, they're kind of hidden in the background. Nobody really, talks about them. They just work very, very well. So only when there's a problem that individuals start to say, well, why has this happened, and how can this possibly have happened? And the uncertainty that certain decisions can make can ripple out through the world in this interconnected marketplace. So yeah, financial services, bit of an all-encompassing term. Yeah, it's broken down into some distinct areas now, and there are organizations that we'll probably talk about a bit later who are really capitalizing on the unstructured nature of lots of these markets and how they're changing. So yeah, and I think the second point was
Alpha data.
alpha data. So alpha data is it's kind of finding insight and knowledge and information in data that you wouldn't normally associate with a financial services company. So for decades, financial services companies, they've been holding data in beautiful tabulated relational databases, data fitted beautifully into very structured environments. And of course, now with things like social media data, with financial reporting data, the whole new world of large language models able to read and assimilate information that isn't just numbers. How do we find value in that data? How do we make it work for us? And it's a thing that started a number of years ago with a book called Flash Boys. I don't know if you're familiar with that book, but this was an organization that's produced a data cable. So rather than going over and round obstacles like mountains, they just tunneled right through. They built a straight line connecting Chicago to the main financial capital markets. And then they offered that cable to the highest bidder. And every organization had to bid for that because they realized there was a significant number of microseconds of savings. And if you can trade algorithmically in high volume faster than everybody else, you're going to have the advantage in the marketplace. So it kind of started and people thinking, yeah, this isn't financial data, but this is something that is material to our business. Yeah, alpha data is all of this kind of information that we make available to make more informed decisions. And the third thing, Internet of Things, is we now live in this world of massively connected devices. So we have smartphones, we have a number of different devices. We have watches that can read off our health data and health information. All of this information can be folded in to an individual to help us understand their profile. So the Internet of Things, it includes things even like doorbells, believe it or not. So who'd have thought a doorbell would be such an important device that Amazon would pay over $1 billion for a doorbell startup? And they turned it into their internet connected device. And it now is used by over 400 police forces around the world. It solves significant crimes. Police forces, if there's an event has happened, they want access to doorbell data because it's important for them to, as I say, to solve crimes. So, Amazon even go as far as looking at information and scanning individuals that come to your doorstep to see if they're wearing a logo from a competitor. So if you're having stuff delivered by Royal Mail or Parcel Force or DPD or FedEx, they know you're ordering online deliveries that are not coming from Amazon. And they want to know about this and know the scale of it. So yeah, Internet of Things, alpha data, financial services, these things are becoming really well connected. And it's organizations that can take advantage of that that are going to steal a march on everybody else. So yeah.
I just had this thought for a moment, like the doorbell doesn't actually ring when it's a competitor at the door, but I'm sure they don't do
Yeah.
that.
Well, it's amazing. And you can actually open the door from halfway around the world now to people if you want to. It's just utterly incredible. So, yeah.
It's fascinating stuff.
Yeah.
I mean, I used to be a DBA, believe it or not, as well.
Oh,
So
right. Okay.
this was
Yeah.
something, that I did when I first started my career. And I have no idea how databases work now, because I'm sure they've all completely changed.
Well, yeah, even the concept of a database, now it's moving towards a data lake. So rather than having a structured database environment, we just literally throw all of our data into a lake. Every different source of data goes into a single lake, and then we need the tools and the techniques and the levels of abstraction to sit on top of it so that we can get the data out in the right way. But it just avoids these kind of siloed, systems that lots of organizations still are kind of struggling with. If everything is in one place, it's a different set of problems, but at least the data is all there and it's no longer siloed.
Yeah, and so this sort of revolution that's happening in data analysis, what is happening in that space, and how is it different to the way financial services have been doing this in the past?
Yeah, yeah, really good question. So what's happened is if you think about classic investment bank, and so they would kind of scour the best universities in the world and pick up maths and physics grads and experts in stochastic calculus, because they were basically building complex forecasting models. And if you could build a better forecasting model than your competitors that operated faster and gave you more insight, then you were going to take an advantage. But the new world, is somebody that's looking at finding value in data that isn't just numbers. Those skills of an expert in stochastic calculus, whilst important, they're not everything. So banks are now struggling with, well, who do we recruit? How do we do this? What are the kind of skill sets that we need to make our business work more effectively? And we're seeing it everywhere. I mean, so I did some work in the past with an Asian company called Microloans. And microloans, they're entirely app based on a mobile phone. And when you apply for a loan, it's basically in the Asian market, people need small loans, but for a very short period of time. And that doesn't really fit the classical European model. And so they said, well, what is the risk profile? Can we build different risk profiles using data? So they take things like, how charged is the phone when you make the loan application? Because if it's only at 15%, you're a slightly more risky individual than somebody who makes sure their phone is always well charged. What other apps are on the phone? How many mistakes were there when you were filling in the form? How long did it take you to complete the form? So all of this they've built into around 100,000 different risk profiles of individuals, and they now make a loan agreement within 8 seconds. So they, from 8 seconds of hitting return, they will say yes, it's approved, or no, it's not approved. I mean, it's just incredible. It's revolutionized the sector. But if you think about the macro trend of that, what's happened is the Asian market was a cash-based society, so everything was based on cash. And then the big payments platforms and organizations like Visa and American Express and MasterCard were looking at the Asian market as the new big opportunity. Of course, what's happened is they've leapfrogged the credit market and they've gone straight from a cash-based society to a mobile phone finance society. So that whole sector has been cut off at the knees by this new technology and these new players, and it's happening everywhere.
So is the takeaway there, if you want to get a loan, make sure your phone's charged?
Make sure your phone's charged. Yeah, absolutely.
I love that.
Yeah.
And look, alpha data, it's sort of about experimentation. It's about really utilizing that data in a better way.
Yeah.
How can sort of large risk-averse financial organizations safely embed this mindset of experimentation at the heart of their products and their kind of risk model innovation? And just with my sort of hat of agile on,
Yeah.
I can see the smaller players, the small fintechs, being able to do this. They're
Yeah.
very nimble. They're able to sort of build that experimentation mindset. But how do the larger organizations do this?
Well, the truth is they're being forced to do it because the whole sector is being changed by fintech companies coming in. So these new nimble disruptor technologies put data first. They've adopted all of the principles of organizations like Amazon. So Jeff Bezos, his mantra is friction. Where is the friction in this organization, and how can I use my data and data techniques and agile projects to change things and remove the friction? And so banks used to actually work the opposite way around. So if you had an account with a particular high street bank, up until about 10-15 years ago, you would change your wife or your husband more regularly than you would change your bank account. Statistically, that is absolutely true. It worked on complete inertia. So then these new nimble organizations come in, and they've got more targeted personalization, personal services. You can interrogate your account more. They will give you more feedback, that you can ask them questions and they'll give you answers much more responsively. So they've been forced to do this. That's the truth of it. They have to do this. Otherwise, they're just going to lose account after account after account. And that's what's been happening. So many disruptor banks, Starling Bank, Metro Bank, these organizations, they're all driven by data. And it's happening now in the major banks. They're playing catch up. But the problem they have is they've got lots of legacy systems. So you go to any of the major banks and you'll still find some, IBM AS400s in there. You'll find lots of old technology. You'll find systems that are absolutely core and running very well. And they almost daren't open these systems up for fear of what could happen, because the people that wrote the code and the people that manage these systems, they're probably retired by now. But it's very, very interesting. But that's the new world that they operate in. And to answer your question about how they can do this and how they can be agile, what we see is companies are starting to explore the art of the possible. So you'll have small teams that are given a task to say, we've got all of this data. So a good example is, in car insurance. So car insurance, if you are a learner driver or a new driver, car insurance companies didn't really want to touch you because you are totally unknown risk. Okay, but they had to by law. And insurance is a distress purchase. Okay, you have to have it legally. So they would do it, but they would price the insurance to the maximum risk. You're a 17-year-old girl living in this postcode, driving this car. What's the worst that can happen? And that's how we price your risk. Suddenly, new companies come in and they say, we're going to ensure nobody but learner drivers that nobody else understands, because we're going to use the data to understand them. And once we understand them, we'll have a pricing model that is completely different to everybody else. And if we do a good job of servicing them and managing them, they'll stay with us, maybe for life, maybe certainly for a number of years. So that's what they did. So companies like Ingenie, who I think were the first to do it, turned something that nobody wanted to touch into a business model that was incredibly successful. And then they start giving feedback, and instead of having to base everything on an actuarial model where you're pricing everything based on historical risk, they say start driving for a couple of weeks, then we'll give you some feedback, then we can adjust your pricing. So your insurance may cost £300 a month to start with. If you're a really good driver, it will drop to £200 a month. And that's what's happening. And me, when my daughter was learning to drive and she was insured with Ingenie, I used to love getting these new quotes through. Oh, it's gone down again by another £100. And my daughter would get the app saying your driving is great, your cornering is good, maybe think about your brake, feedback, turning something that is just something you have to have into gamified learning, capturing data, and turning it into a business. And that's really what's happening across the whole of fintech.
And it's interesting, the sort of mindset shift. I remember way back, I remember sitting through a presentation where the presenter was talking about some famous personality. I think she was an actress, and she was banking with a particular organization, and they kept getting her surname wrong.
Mm.
And she had notified them a number of times, but because their tech wasn't very well integrated, I think one system kept overwriting it and setting it back to the wrong name. And this really annoyed her. And eventually she actually switched accounts to another bank altogether, which was probably devastating for the bank.
Yeah.
But again, when I was working for the Global Investment Bank, I remember one of our technology leaders used to say, don't think of us as being a bank. We're a technology company servicing
with a banking license.
Servicing customers with financial services.
Yeah, that's right.
I know you've talked in the past about certain companies, such as oil companies, that see data as almost as precious as the oil itself. So could you tell us a bit more about that? How should organizations be pitching themselves or thinking of themselves in this new data world that we're talking about?
Yeah, I mean, it does come down to personalization, completely. I don't care that, if I bank with NatWest, I don't care that they have another million. I just care about what they do for me and how they can do it better for me than any other bank, really. And what can they offer me? So it's deep personalization. It's about providing services to me. It's about responsiveness. It's about communication, two-way communication. So really, that's how banks are being driven right now. Thinking of everybody as an individual customer and serving that individual customer in absolutely the right way. But I mean, it's very interesting. There's a long way to go. And even companies, when Apple launched their new credit service, I don't know if you remember a few years ago. But so Steve Wozniak, one of the founders of Apple, with Steve Jobs, original founder of Apple, multi-billionaire. So he applies for his Apple card, his Apple credit card, and he gets a loan or a potential credit limit of about $50,000, I think. So say $50,000. His wife, who lives in the same address with the same surname, married for however many years, she applies for an Apple credit card. She gets a credit limit of like 2,000. Bias in the system, bias in the data. So we've still got a lot of way to go before even some of these companies, deeply technology-driven companies, get it right. And it comes from not matching up the data correctly. I mean, it just doesn't take a kind of a rocket scientist to work out that these two people are connected and that they live off the same income. So yeah, incredible.
And who is responsible for making all of this happen? Is it the CEO, or are there other people in the organizations that should be really thinking about this?
Yeah, I mean, obviously, it is driven by the CEO. So if you look at big banking groups, JP Morgan Chase, for example, one of our big customers, that is very much driven from the top. And Dimond is always talking about, being an AI-driven organization, letting the data tell the story, having an AI-focused, AI-enabled, data-aware organization. Because, everything in data science. Data's great, but you need to have the right skills and techniques to be able to make that data work for you. And that's everything from literacy to data governance, data understanding, data storytelling techniques, right the way through to the very, very advanced ways that you handle and massage data and use data effectively using mathematical techniques. But he's infusing, and we're seeing this everywhere, is the leaders of organizations are driving this. And it's because they're laying off bets at the moment that are almost existential for them as companies. If they get their technology strategy, their technology stack, their lack of training of individuals, if you get that wrong, they can be set back for a decade. It's that embedded and it's that important. So it is driven from the top, but then you've got a team of people now who, working with under the CEO, chief data officer. We're seeing roles like chief AI officer being created now. And you're seeing organizations now understanding that every every AI product that they build is a product. Think of it as developing a product or a service. And so we're seeing a lot of organizations now building project management teams, wanting project skills, making sure the project is on track. So rather than just this loose exploration of using data, how do we create really great data products? What are our competition doing? What's the horizon look like? How can we match the horizon when it comes towards us? So all of that sort of thing is happening right now, and it's incredibly complicated because we're in a world of AI models that are evolving almost on a 3-month cycle. We heard large language models when they were launched in November 22. ChatGPT. And now all of those models, every one of the big frontier models has moved from just being a language model to being a multimodal model. So it can give you some text and it will turn it into a video, or to give it an image, it will turn it into some text. They can do pretty much anything. So trying to keep hold of that and understand it, and then say, how does this help me run my bank or my investment company? Or how does it help me with my wealth management business for my clients? The world of opportunity is huge, but the world of getting it wrong is equally huge. And so we do a lot of work as an organization helping people understand the art of the possible, what works, what doesn't work, how do you put the right guardrails in place. And we're also seeing, things like the Financial Conduct Authority really stepping up and helping organizations to make sense of this and make sure they stay within the guardrails, because we're in a world of GDPR and a world of the EU AI Act, and there are certain restrictions and things, particularly in financial services. High risk AI includes things like making decisions on giving somebody a loan or a mortgage or a credit card, because that has a material effect on their life. So that is defined as high risk AI, and it has certain restrictions on it and certain disclosures that you have to give as a financial services organization. So yeah.
And look, there's this sort of lake of data, as you mentioned at the start. There's just so much of it, and to make sense
Trillions
of all of that,
data points. It's
yeah,
insane. Yeah.
And you can just get lost in that detail. But you mentioned there about sort of data storytelling. Could you give us an example of data storytelling and how it can be used to turn all of those data points into something that's meaningful for somebody?
Yeah, yeah. I mean, there's so a couple of one from we mentioned car insurance, and so a good example is an insurance company, car insurance company, who they literally ran. They had a big data set, and they just took a big chunk of that data and ran it through what we call an unsupervised learning model. So an unsupervised learning model is where you just give the model a load of data and you don't ask it to do anything other than see if there's anything interesting in the data. Are there patterns in this data that are interesting? Are there anomalies? Are there things that we should be thinking about? So anyway, they run the data on the model, and it comes back and finds patterns in the data that include around 400 people who are they're basically doing the same thing on a daily basis. So they're going to certain points and then doing these kind of circular routes around where they live. And when you look at the GeoIP data, they're basically going to parcel collection and distribution centers, picking up parcels and then dropping them off around a route, which is their route. So effectively, they're running a business with their domestic car insurance, which is illegal. So that enabled the insurance company, once they gathered that insight, analyzed the data, got the insight, the story, the narrative they built was, look, we've got all of these people, rather than just, ignoring them or canceling their policy, why don't we upgrade them? What would that look like? Can we build a marketing campaign that very gently suggests that they upgrade to business insurance? And another example would be credit market. And so the credit card providers, they work in one of really three sectors. They work in the prime sector, the subprime sector, or the bit in the middle, which is the access market. So all of the credit card companies that play in the prime sector are looking at the access market, and that top quarter, that top quartile, what do those people look like? Because they're very similar in many ways to the prime market. So can we use our data to bring these people on, to make them offers, to maybe give them a slightly different credit limit on the card, to manage them in a different way? Some of them will be really safe bets, and we can bring them on, and nurture them to the prime sector. And others, maybe, we've managed the risk effectively and it's not a problem for us. So lots of work like that going on, using data science techniques to, again, develop new products and services and more personalization as well.
And David, look, if I'm sat at home and I'm thinking, this sounds great, but my skills at the moment need upgrading, and I need to sort of really get up to speed with all of this stuff. In your article, you mentioned that Goldman Sachs now hires more data scientists than traders, which blew my mind, because when I was investment banking, the traders were seen as the cool people in the bank. They were the coolest of the coolest. And so, does this mean that the future of financial services will belong to engineers over those traditional finance experts?
I think what you're going to end up with is, people who become experts they understand financial services and the way that they're, the principles behind financial services and products. So you couldn't just take a whole load of, data scientists, put them in and create a bank, for example. They need to know the way the systems work, the way the markets work, but they will work with smart people. So instead of having, a huge layer of traders or a huge layer of individuals that are experts in capital markets or whatever, you'll have a smaller number with huge amounts of knowledge and domain experience, but they'll be working with a series of engineers and data scientists and people that can make that magic happen. So they'll be the people that are using the data in the right way, making sure that they can develop products that are marketable, and making sure that they have products which outperform the competition. But all of the underlying principles around compliance and know your customer and all of those policies will exist as well, but they will also become slightly more automated. So the know your customer, procedures and processes, governance. But I mean, I'm still blown away by, one big investment bank I spoke to a while ago. They were talking about, we want to use AI and machine learning and more data to look at things like money laundering. And I said to them, well, how does your money laundering work right now? What would be an indicator? What's the main predictive feature? And they said, oh, it's where the trade was made. And I said, well, what does that mean? So, well, if it's made in certain parts of Africa, and they specifically said places like Nigeria, then we will automatically put it under more scrutiny. And that was the sophistication of it, where the trade is made. But there is more data and information that you can bring in and more learning that you can apply. So just using that as a case every time, you may learn about certain trades, you may learn about certain groups and individuals and realize that they are not a problem. They're just simply trading at high volume, So there's all of these kind of things. It's intelligence around the data and the information that will make things more effective.
And off air, you and I were talking about sort of product discovery, which, many organizations use to validate ideas before they invest loads of money into building those as products or features. And you mentioned that actually there's something called pilotitis, which sounds like a disease of some sort. But can you tell us more about that? Like, is there a different mindset needed in terms of how we bring new products to market?
Yeah. So pilotitis is a big problem, and not just in financial services. It's a problem everywhere. And so it's the concept of you get a couple of open AI licenses, or using Meta's model or whatever, and you start to run it through some data, and it's quite interesting, but it's a pilot, so it's a toy problem working on toy data, which when you start to try and scale it up can become a problem. It can introduce security risk, it introduce governance risks, it can become unstable, doesn't have quite the volume of data that it needs. So what we need is more of a procedure around how we go from really effective pilots and how we scale that up to commercially operational models. And it is a big problem across the industry, and it's a big problem for many of our clients as well. How do we do this? And so organizations, what we're seeing is companies are starting to treat an AI system or a data science system as a product in its own right. So if it's a product in its own right, you have to have goals. What is it you want the thing to achieve? What's the outcome that you're looking for? What kind of governance and guardrails do we need to put in place? Who's managing it? Do we have a product manager that can manage this whole process? Do we have a project team around it that can work on it effectively? So it's treating things like, you're developing a new car, if you're, Ford or General Motors or whatever, or you're developing a new financial services product. It's the same thing, but now because it's data driven, and it's so much more infinitely flexible as well. So this is the other side of it. You can pivot more quickly if you find a particular problem, and then the answers will reside in the data. So it's making sure that the data is at the heart of everything, and then you have really smart people in there who can continuously iterate to get the right product. And then lots of user testing, because it's app based, you're capturing data all the time. You can ask people for feedback. So sentiment models are now really important in financial services. How do you feel about the service? How do you feel about the transaction? Did this go the way you wanted it to? Sentiment models used to be just what you call binary classifiers: positive, negative. Now you can get so much more information, and if you use that correctly, you can start to work out this person is a potential churn risk. I think that they are so unhappy that they could leave us. What can we do about it to keep them? Because in financial services, if you lose a customer, you've probably lost them for 3 to 5 years minimum. So you need to keep your customers, particularly in this really aggressive world with lots and lots of new startup organizations doing things really nimbly.
So, David, if you had to give a CEO in financial services one bit of advice to stop doing things badly and getting things so wrong, what would that be with respect to alpha data?
So it's probably use data more effectively, let the data tell the story, and don't kind of use your heuristics and biases, and interpret the data through those. I think you just have to let the data tell the story. And some of the most incredible products and services that have been developed in very recent times have been developed because people have just let the data tell the story. Look at the data, analyze it. What's it telling me? How can I put this to use and develop products and services around it? But I think, with a lot of, obviously, it's a difficult position and it's a lonely position being CEO, particularly of a big financial services organization. But you've got to be very dynamic, and you've got to let the data tell the story more and more, because, the entire world of financial services is now data. It's all data. It's just the movement of noughts and ones across the world. Every product, every service is just based on that, really. So the data has to be at the foundation of it. No heuristics, no biases. Let the data tell the story.
And I mean, it all sounds great. And if we lived in a perfect world, I'm sure lots of financial organizations would absolutely take this advice. But it feels like in the UK and Europe, we're sometimes hindered by some of the rules and regulations like GDPR and other acts. Whereas other parts of the world, I'm sure, are a lot more relaxed. So are we almost tying one hand behind our back while we're trying to implement all of this?
Um, no, is the short answer. I think what's happening, again, this is all very new. And if you think about state, so you have China, which is probably one extreme. We control everything, we have access to everything. Um, the US, completely different, totally laissez-faire attitude towards regulation. And then you've got the EU in the middle, basically. And I think what's going to happen over a period of time, particularly with financial services, organizations are going to, and individuals and companies are going to look for well-regulated, well-governed economies and groups. So I think in the UK, we've built up a huge reputation internationally for being excellent governance, excellent policies, excellent procedures, greatly regulated authorities. And I think this is just going to be an add-on to that. So I think if we destroyed that and we created this Wild West, like a lot of countries seem to be, looking to do, I think that would be a negative in the long term. I think we've just got to hold these principles and policies, and that will see us through for the future.
David, it's been such a pleasure talking to you about this topic today. And I think the thing that I'm going to remember and take away is the fact that we change partners more often than we actually
Not
change
anymore,
bank accounts.
actually, not anymore. But it was certainly the case, yeah. And the whole sector, particularly retail banking, did work on inertia, and they can't work on inertia anymore. They've got to get really smart, otherwise somebody else will take their clients and eat their lunch.
Oh, brilliant. Well, no, thank you once again for sharing your insights.
Yeah, thank you. Thanks, Paddy. Great. Thank you.